Hey everyone, and thanks for jumping back into the cryptoverse. Today, we're going to talk about Bitcoin and we're going to be discussing the halving. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. The sale will be ending just after the halving, so make sure you check it out and lock in the lower rate. Let's go ahead and jump in. The Bitcoin halving is probably one of the most significant events in our industry. I often find people debating every cycle, whether the halving is priced in or not, whether it has an effect on price or not. My view is that, we've had three halvings before. We had one in 2012, one in 2016, and of course, one in 2020. And I certainly do think that the halving does play a role in the cycles of the cryptoverse. I also think that monetary policy plays a role, but I don't really fall in either camp completely. I don't think that it's only based on supply side stuff, and I don't think it is only based on monetary policy. I think it's a combination of different things. Markets are complex. They're based on a lot of different things, and so because the halving is one of the most important events, I wanted to do a video where we talk about it and talk about where I have previously said that the price of Bitcoin may be. Now, price predictions are honestly something that I'm not super into, because usually price predictions don't really turn out that great. If you put in a price prediction and it goes above it, then the comments aren't so nice. And if you put a price prediction and we don't quite get there, people are also upset. But I wanted to revisit something that I said 4 years ago and kind of see where are we with respect to that. So 4 years ago, I put out this video, Bitcoin fair valuation at the next halving in 2024. I put out this video in 2020, in May of 2020. The price of Bitcoin was around $8,000. And what I said back then was that if we follow the fair value logarithmic regression trend line, then by the fourth halving, which is the halving that's about to occur, the price of Bitcoin would be between $40,000 to $50,000. Okay, that's what I said back then. Clearly, we are above that price, right? Clearly. If we go back and look at the video that I put out a year ago, or no, this was at the end of 2022, or mid 2022, just before the final collapse occurred. I also sort of drew it out going to around 40 to 50K. So with Bitcoin right now at 63K, it's ahead, right? I mean, there's no denying it. It's ahead of where I said it was going to be back then. Now, of course, back then, putting out a price prediction 4 years later, and hoping that it would be accurate at all was probably something I was fairly naive about. But here we are 4 years later, and the price of Bitcoin is actually above the target range that I put. And it's also above this area that I put as well going into the halving. And so with that in mind, I want to discuss a couple of things that may come up after the halving, that could very well take some people by surprise. Now, there's a lot of different thoughts to this current cycle, with it being, so hot at this point in the cycle. We've never seen the market put in new highs before the halving, right? This is the first time ever that Bitcoin has put in new highs before the halving. And so that was, probably one of the reasons why back then I didn't think it would be quite so high. But we are at new highs before the halving. And so I just want to talk about what to potentially expect after the halving. Now, there's two different trains of thought here, one of which is a left translated peak. Okay. Now, to be completely honest, I'm not really in the left translated peak camp, but it does have maybe 40% of my attention. And the reason for that is if you were to take the ROI of Bitcoin from peak to peak, and you take it from the April peak instead of the November 2021 peak, and you compare it to last cycle, it sort of looks like it potentially could form into a peak sooner rather than later, in which case you would get a left translated top, meaning the actual top occurs way before anyone thinks it will. Historically, Bitcoin has topped out in the fourth quarter of the post-halving year. So if you look at major peaks that Bitcoin has had in the past, if I were to get an arrow here, you can see that this top was in Q4 of the post-halving year, this one was in Q4 of the post-halving year, and this one was in Q4 of the post-halving year. We're currently in Q2 of the halving year. So, that is still about 6 quarters away when Bitcoin typically tops. But again, so far this cycle is anything but typical, with Bitcoin putting in new highs before the halving. So if it is to translate into a left translated peak, a left translated cycle, then it would be more likely that the top would occur in 2024 as opposed to 2025. If we are going to follow that, then I have to imagine that we would follow potentially what happened last cycle. Now, it's not really my base case, but again, it would be foolish not to at least acknowledge the similarities. But on the other hand, where I would say 60% of my attention is right now is what if this cycle is just like prior cycles and we are all over here jumping through hoops trying to explain why this time is different when potentially it just peaks when it normally does. And one way that we could go about getting to that point would be that if we had a cool off in the summer, okay? Now, there's no guarantee, and if we follow this path, then you might see the exact opposite of a summer lull. But if there is a summer lull, then one thing to keep in mind, when you look at the last 2 cycles as measured peak to peak, you can see that at this point in the cycle, Bitcoin was only up, or it was actually still about 60% down from its all-time high. Now, I want you to think about that for a minute. In both prior cycles, at this point, as measured peak to peak, Bitcoin was 60% below the all-time high. 60% below it. Now, right now, Bitcoin is not 60% below the prior high. In fact, 60% below the prior high would put Bitcoin all the way down at around $26,000. That's how accelerated we are this cycle. Look at the last cycle, 60% down from that peak. You can see that by May of 2020, that was when the halving occurred, Bitcoin was down 60% from the high. And then if you go back to the cycle before that, the halving occurred in July, if I remember correctly. And if you go to July of 2016, you will see that Bitcoin was approximately down 60% from the high. This halving, it's not, right? It's not 60% down from the high. In fact, it is at the high. It's at the high, which has never happened before. So this has caused a lot of people to view this cycle as different from the prior ones. And I have to tell you, they make a fair point. They make a fair point. And if you measure it from the April top, you can kind of see that Bitcoin is doing just about what it always does at this point in the cycle if you take the April top as the more important top. And of course, there is evidence to suggest that the April top is the more important top. For instance, some of that evidence to suggest that the April top is the more important top is to look at views to a lot of different cryptocurrency YouTube channels. And to note that there were more views in the first half of 2021 than there were in the second half, where Bitcoin basically just put in a lower high in terms of social activity, but somehow a higher high in terms of price. if you look at Bitcoin with respect to its 50-week moving average, one of the things that it does after every major cycle top is that it goes back down to the 50-week and then gets a bounce, a dead cat bounce, before ultimately capitulating. We saw that happen over here as well. Go back to the 50-week, get a dead cat bounce, and then go all the way down. This past cycle, we did not see that exactly. What happened was we went back to the 50-week, and instead of it just being a dead cat bounce to a lower high, which is what potentially that would have been, we ended up getting a higher high, which took a lot of people off guard. Now, I was optimistic of a higher high, but honestly, I think because for wrong reasons, and sometimes you get things right for the wrong reasons, and it's important to take that into consideration. So we can see that happened, right? We can see that we went to the 50-week, we got a bounce, but that time it actually led to a higher high. Even the intermediate bull market in 2019 had us bouncing off the 50-week at some point. And so the 50-week today is at around 40K. It's at 39.2K, 39.3K, which is interesting because, again, that is way below the current prices, way below the current prices. And I have to imagine that if we do not evolve into a left translated top, if we do not, right? So there's two options, right? We evolve into a left translated top where the peak occurs in 2024, or we evolve into a normal cycle where the peak occurs in 2025. If we're going to evolve into a normal cycle where the peak occurs in 2025, you really need to see Bitcoin cool off for a while. And again, as measured peak to peak, you can see just how far, quote unquote, ahead of schedule this cycle is. It's actually not that unfamiliar when you think about it. The reason it seems like this time is different is because Bitcoin is at new all-time highs. But if you look at the last cycle, there was a period where it too was well above its prior cycle. But what eventually happened is it bled back down and basically got in line with the prior cycle and then still ended up showing diminishing returns, okay? And then it actually got ahead of that cycle again. This is why a lot of people thought we were gonna go to 300K last cycle, but it still was diminishing returns. So I want to continue to put forth this idea that if we do not evolve into a left translated peak sometime around the halving, and instead the market cools off going into the summer, then you might just see something like this where it causes the cycle to just get back in line with prior cycles. Now that of course could make a lot of people think that the peak is over and the bull run is completely done, and maybe they're right? But there is at least some evidence to suggest that that could be what is ultimately in store for us as we get later into the cycle. If you're not familiar with how the last cycle worked and what happened when we bled back down here, there's a number of things that really put Bitcoin back into a intermediate bear market. Sort of, you had a quantitative tightening bull market, and then a bear market as rate cuts arrived, and then a QE bull market that topped in 2025. Now take a look at Bitcoin this cycle and see how it's doing something very, very similar, in the sense that it's had this major run during high interest rates. You can see it's had this run during high interest rates. And in fact, if you were to look very closely at when the Fed paused here and compare it to this, you can see something very similar happened, right? It fell just after the Fed paused. Here, it fell just after the Fed paused, and then it went up quite a lot. But ultimately what happened is that it found a local top as just before rate cuts arrived, and then it bled for a while before getting another bull run into the post-halving year. Now, by the way, the halving is only four days away. So if we do come up and put in a new local high, before the halving or maybe around the halving, that still doesn't necessarily invalidate the idea of the market cooling off sometime after the halving if the left translated peak is not going to occur. Okay, so again, there's two thoughts. You have a left translated peak where us degens just can't help ourselves and everyone just front runs everything until the consumer caves, or the other idea, which would support the idea of this time not being different, would just for the cycle to get back in line. Now, if the cycle gets back in line, then maybe this view from 4 years ago of around 40 to 50k Bitcoin by the fourth halving isn't that far off. I know right now, if we were to go back to 40 to 50k, it would probably feel like the world's falling apart for a lot of people. But one thing to consider is that when ETH, I don't know how I made it this far in the video without talking about it. One thing to consider last cycle is that the 30% drop, Bitcoin had pretty shallow drops during this QT bull market, right? Pretty shallow drops. And then eventually it finally got a 30% drop. That 30% drop corresponded precisely to the point when ETH Bitcoin broke down. And ETH Bitcoin just broke down below the summer 2022 low. So if you were to get a 30% drop sometime after the halving, that would actually put you kind of right around that range that we said way back over here. And in addition to that, it would also get you loosely back in line with where the prior cycles were. So going into this Bitcoin halving is certainly different in the sense that we've never seen a new all-time high before the halving. If you were to go look at the risk metric of Bitcoin, you will see that the risk on Bitcoin has never been this high going into the halving. In fact, the last time we went into when we went into the 2020 halving, the risk of Bitcoin was at 0.4. When you look at the 2016 halving in July of 2016, the risk on Bitcoin was 0.4. Today, the Bitcoin risk is 0.6. So it's actually quite a bit higher than it was during the last two halvings. And the halving before that occurred in late 2012, the risk on Bitcoin at the time was around 0.3. High 0.2s are around 0.3 or so. So historically, we've seen the risk on Bitcoin going into the halving at around 0.3 to 0.4. This time, we find ourselves at 0.639, and only a few weeks ago, the risk was in the 0.7 to 0.8 risk band. To give you an idea of what the 0.4 risk band would look like, which is where we were going into the last two halvings, if you were to take a look here at where that 0.4 to 0.5 risk band would be, it would be from 33K to 44K. That's where the 0.4 to 0.5 risk band is. That's where the price of Bitcoin was at the last two halvings. And you can see actually that Bitcoin, when those rate cuts arrived right here, had that correction back to the 100-week moving average. Now, what's fascinating about that is that it would correspond to the prior breakout zone. So I feel like there's two different ways that we can look at the market here that make the most amount of sense. Number one is that this is not different from the prior cycles, and we're kind of on track with where we should be, and that could be viewed by maybe looking at the ROI after the low. If you look at the ROI after the low, and you compare this cycle with 2 cycles ago, this is exactly where we were. But you can see that at this point, it did cool off for a while, and then did get a drop. Kind of, this was day 520 or so, about a month and a half from now or so. So you can view it like that, or you can view it from the peak and still say we're where we should be based on measuring it from the April top, right? If you take this out peak to peak, if you measure it from the April top, we're pretty much where we should be. But again, I can't help but think, are we doing the same thing again, where everyone tries to come up with a reason for why this time is different, but in reality, it's not. So my thought process on the matter is this as we go into the Bitcoin halving. If Bitcoin accelerates into the halving and post halving and into June, right? If it is something like that, where, over here in 2019, in fact, before rate cuts arrived, it actually did rally until June. Last year, we had a local top in April, but then we swept the high in June. If we get something like that, where Bitcoin continues to go up throughout the summer, then I would be more in tune with the idea of a left translated top, where you get a top in 2024 as opposed to, say, 2025. However, on the other hand, if you get a local top by Bitcoin here as rate cuts arrive, and then instead of, and that could still include sweeping the prior high, right? But if you get a low, kind of like we did over here with the spot ETF, we put in a new high on the day of the spot ETF for the cycle. If, on the other hand, we see the market cool off into the summer and go to, say, the 0.4 to 0.5 wristband, or even the 0.3 to 0.4 wristband, and we get the market more back in line with the prior two cycles, then I think that perhaps the base case should still be that the cycle is playing out just as it always has. And you still could get a top in late 2025. And in fact, it was this very intermediate bear market that kind of scared a lot of people off, in fact. What happens if something like that happens again, where rate cuts arrive and you go back down, scares a lot of people off, and then because everyone gets scared off, the Fed starts printing money again, and then you get a QE bull market. I've said this before, and I'll say it again. There's two types of bull markets in crypto. There's quantitative tightening bull markets that occur during periods when the Fed is reducing the assets on their balance sheet. That's what we got in 2019, and that's what we've got over here. And during those periods, ETH Bitcoin goes down. ETH Bitcoin goes down during QT, quantitative tightening bull markets. How many people for the last couple of years have said that ETH outperforms Bitcoin in a bull market? That's not true. Not without any disclaimer. Because as you can see, Bitcoin's been going up since late November of 2022, and ETH Bitcoin has been going down the entire time. So that is why I still think there is some evidence to suggest the cycle may play out like it always does, rather than a left translated top. I'm not completely unsympathetic to the idea of a left translated peak. There's a lot of really smart people out there that frankly provide a compelling case for it. And I could honestly provide a compelling case for it. I just showed you guys some of the different charts. But if Bitcoin does not run into the highest wristbands, the 0.9 to 1 wristband this summer, and instead it just cools off like it did back over here after the halving, it might scare a lot of people off, but perhaps it's just doing what it did last cycle. And the only reason that the mid-cycle top came later was because rate cuts came later this cycle than they did last cycle. So you have quantitative tightening bull markets where Bitcoin goes up as ETH Bitcoin bleeds, all Bitcoin pairs bleed, and then you have QE bull markets where Bitcoin goes up as ETH Bitcoin goes up. So ETH outperforms Bitcoin in a QE bull market, but not a QT bull market. There's two different types of bull markets. So that is a very important distinction. And I think we've only received more and more evidence over the last year that Bitcoin really is dependent somewhat on monetary policy, because last September, when ETH Bitcoin came back down to this area right here, there were a lot of people that thought that it had bottomed, because that's when it had bottomed in the last cycle, Q3 of the pre-halving year. This development here, which is what I said was likely going to happen, this development of the devaluation of ETH against Bitcoin shows that the market is very much dependent on monetary policy, whether we want to believe it or not. So if that is the case, right, if that continues to be the case, then you very well could see a repeat of what happened over here, sort of an intermediate lull in the market, followed by, because of rate cuts, right, that occur during rate cuts, followed by the last rate cut, which leads to a QE bull market where you maybe top out when you normally do in the latter part of the post-halving year. So two different theories. If you're new here, that's what is, has really been discussed over the last year or so. Is this cycle different? Is it not? I honestly think if you have a bias on it, you're going to find the evidence that you're looking for. I think we'll know soon enough. We'll know soon enough. If Bitcoin cools off into the summer, which it very well could. We've seen gold break out just like it did in mid 2019. We've seen ETH Bitcoin break down just like it did in mid 2019. Alt Bitcoin pairs still haven't broken down yet. But if it cools off into the summer, then it just seems like it's the same thing as last cycle. It's just that the mid-cycle top was 9 months later, about nine months later. If, on the other hand, after the halving, Bitcoin just accelerates to the upside once again, then I will probably say that there's more merit to the idea of a left translated top. But that's what I'm looking at right now. And so to just revisit my prediction back in 2020, what would be the fair value of Bitcoin at the fourth halving of 40 to 50K, I find myself today seeing a $64,000 Bitcoin 4 days before the halving. And I can't help but think to myself, wow, back then when I made that prediction, I thought it was a lofty prediction that frankly was maybe not that likely to come true, because when Bitcoin is at 8K and it really hadn't done anything for a couple of years, I wasn't really that optimistic of exactly how accurate this prediction would be. Come to find out, I was too conservative potentially, right? I was too conservative. So it just goes to show how difficult these markets are to predict. 4 years ago, price of Bitcoin was at 8K. I said fourth halving 40 to 50. Instead, we find ourselves at 64. And what's fascinating to me is that if we were at 40 to 50K, I think it would, a lot of people would think the world's falling apart, when in reality, that would have been what the fair value sort of suggested it would be. And that chart that you see in that video is just this chart right here. These regression bands here. So at the last halving, we were at the fair value. That's the other thing why I said 40 to 50K back then, because at every prior halving, Bitcoin was at the fair value. So the fit to non-bubble data. So in November 2012, Bitcoin was at the fair value fit to non-bubble data. In July of 2016, Bitcoin was at the fair value fit to quote unquote non-bubble data. In May of 2020, Bitcoin was at its fair value fit to, again, quote unquote non-bubble data. Theoretically, I should have updated this chart because it does, I think, need to get updated every cycle. I haven't really done it yet. If I did update it, it would just shift it down very, very slightly. But right now, according to this chart, the fair value is around 52K. But if you were to refit it based on this data over here, it would actually probably put the fair value somewhere between 40 to 50K, which is why I said back over here, like, we'll have to refit it, and it'll be around 40 to 50K. So we're above that level right now. If on the other side of the halving or something we see that level, just know that is what the the regression band would have ultimately suggested for this part of the cycle. So those are my thoughts going into the Bitcoin halving. We will see what happens as the halving comes around. It's only 4 days away, and we will do an update in maybe a month or so. We'll see what happened, after the halving. If we just continue to rally on into a left translated top, or if it cools off like 2019 and we just kind of come back down and cool off until the last rate cut arrives. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and again, check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. Links in the description below. Remember, that sale is going to end after the halving. So lock in the lower rate now. You will get access to thousands of different charts, not just the ones I showed in this video, but thousands of different charts. We have on-chain charts, social media charts, risk metric charts, not only for Bitcoin, but also for hundreds of different cryptocurrencies, and macro charts and charts for equities as well. So make sure you guys check that out. Lock in the lower rate. Links in the description below, intothecryptoverse.com. Thank you guys for tuning in. Subscribe, give the video a thumbs up, and I'll see you next time. Bye.